Okay, so somebody asked me, how do you calculate your martingale re-entry lot size based on your pip grid system? Okay, what I'm really doing is, it's not so much the pip grid. I could do a linear scale in. When you see re-entry, it's more like I'm just going to accumulate. In other words, if I pick a zone that's, say, 15 pips to 45 pips deep for 8 hours, I just lay a blanket of orders in there. Now, I could make each ticket get bigger and bigger. And this martingale here that this guy's doing, originally in the beginning, he's doing 6. It's like geometric. He's going, it's like geometric scaling. You keep doubling it. 8, 16, 32, 64, 128, 256, 512, 10, you're 1080, 1048, 1080, can't remember. So what I'm doing is various things. In other words, what I'm really doing is saying it's not about the pip grid as much as that's just a way to count how deep the market's going to tank. But an example that I showed yesterday of already spelling out my tickets to buy the plunge on the yen. And so I'm going to get in fatter at the bottom. So in this 4-hour chart, I said last night that when it gets down below here, this is where you're going to go all in, okay? This here, the pip grid's there just to let you know what it cost you, okay? If you're going to buy this area, you're going to have to put a 10 pip stop in. You are now up 10 pips on the bottom ticket. You are up 20 pips right now. This is the dollar yen. So you could have rolled this down. You could have either been the guy that got in here on this flag, or you waited. This 4-hour chart though here. So here's I haven't changed the thing since yesterday. I said that I would lightly buy here, and I would just say I'm going to buy a 1K here. Here I'm going to buy another 1K, and I'm going to buy, in here I'm going to buy 1, 2, 3, 4, 5. Maybe I'm buying 5 pips apart, linear all the way down, and linear size. And by the time here, I've got a master stop. This would make everything change. The whole world would change based on a hard stop here. And I'm scaling in all these tickets, and I am taking on more risk. I'm not. So he's going to do an example here, which is more correlated to the way I think of martingale. Because this is not quite. I can't get in that fat because there's no point. You're destroying the fact that you can get in 1Ks. Okay, the whole point of trading small is to lay the orders and feather them out, right? Instead of having a hard stop and a big curb that you're going to have to hop, equity-wise, you've got a ramp. You ramp in, you ramp out. It's once you put a 1K 40 pips deep. So there was this guy who was supposedly the worst trader in the world, and I asked him, would you have a problem with putting an order in 40 pips deep tonight on any currency pair? And the guy said no. And a lot of people would say, I don't know, I got to see the chart, or am I allowed to use stochastics on the 5-minute chart? There's a lot of qualifiers. Am I allowed to break out my algorithm set? I think the most fascinating trade in the world has to be saying, well, I'll buy 80 pips deep in 8 hours. Let's see if this can drop 10 pips an hour then. No, they're not going to fill me. Or it could drop 10 pips. It could drop 80 pips in 10 minutes. So, or it could take. Well, the problem is if it goes past my time limit of 24 hours or 12 hours, then that order disappears. So, if you're going to try to catch a falling knife on limits, then your limits need to disappear. The close ones need to have a rate of change of disappearance that is quantified to the curve the bounce you're expecting. You must be expecting some type of move. Otherwise, you wouldn't have planned for it. Like I said, if you just got into the market and you had good money management, this is how this Forex Hangout guy makes money. People are like, oh, you're doing really good. Yeah. The guy just he's like, you know what? I'm too stubborn. I'm like, you know what? No, this is my trade plan. Let him stop me out. I'm pretty much going to go, you know what? I'm going to write tight scripts and write wide scripts, and I'm just going to let the script stop me out. This other guy's trading kind of like Hilton, but not as brutal. And when he did try to trade bigger, he got killed because he probably wasn't psychologically comfortable being underwater, getting in that big on each decision. I assume he was getting bigger on each decision, but the decisions don't get any better. It's kind of like your tactics of trying to snag a wild animal. You're really trying to catch this beast. Now, you may have to put down traps. You may have to use infrared scopes. And a lot of people would like that feeling of being a sniper, a scalper. They got the latest Reuters feed, and they're sitting there, and they got their finger on the trigger, and they're boom. And they're good at that. They make money at that, and that's fine. And they probably wouldn't even think of swing trading it or position trading it, which would be like in the market for 3 months. And I'm sure that's what the banks are position trading. I don't think they're scalping against people. I mean, when you see the market crash, I suppose it's a big thrill for everybody, because the people that are looking for that deep discount are getting it right away, and the people that are looking for the market to go there are getting fulfilled. I mean, who's ever on the winning side of a spike, just before it reverses, okay, this is the cruelest thing in the world. This is like you are so up in the trade and you're just going to like, oh, I'm just about to trail my stop, and it just came ripping. I mean, they fucking hit my original stop. I don't know if you've ever traded with real money, but that can happen. So if you're trying to trade 3 currency pairs and you're like, holy fuck, they just, yeah, because maybe you can't get to that screen in time, and it's all happening at once, because when the volatility kicks up, if you do watch all the screens, you'll see it kick up across the board. So if the dollar is on the chopping block when the U.S. market's open, when the stock's open, everything's open. At 9:30, things queue up. I mean, you can see the market's just getting ready for the opening of the Dow, and sometimes they'll just keep bidding the currency down, like just slamming it perpetually into the opening of the Dow, and then it rips the other way. So if it looks like it's dripping down, it's typically kind of in this wedge accumulation just before the Dow Jones opens, and then it could rip the other way, or it could continue ripping down, or it could continue dripping down. But if market's dripping down, it's a different entry technique than if it's ripping down, because you plan for the rip down by having super deep orders and shelves. Now this guy's just going to do a classic description, but I'm saying that the notches on the undercuts in the wedges that go way back in the jigsaw, okay, go look at Jigsaw Trader. My only gripe with Jigsaw Trader is that he leaves all the jigsaws behind in the chart, and those areas don't matter anymore to the market. When the market looks back upon itself, all it can see is the most recent price. And the other thing is to think about is that the price is correct. It's the other things that are incorrect, right? These are cross rates. So is the euro going up, or is the dollar sinking? I guess you don't care, right? It's an imbalance, and it's also cross rates, so it's very unique. It's not like you're sitting there trading the yen at the Chicago Board of Trade in futures and options. I don't think it's like that. It's kookier looking. It's more of, they say there's not a bear market or a bull market in Forex because it goes both ways, which means it's a range trader's dream. And that may be the reason why people are getting clobbered, and this guy's claiming that, 1978 indicator just don't go on Forex too well because Forex is too fucking manipulated and too whatever the excuses. They're just excuses as far as I'm concerned.
What the difference is and whether it can work for us as traders. So the idea here is, let's say we are. This is a currency pair, and it's coming down, and we're buying here, and it's come down a little bit more, and we're buying here. Come down a little bit more, we're buying here, and a little bit more, we're buying here. Again, we're buying 1 lot, 2 lots, 4 lots, 8 lots.
See, now that's a little bit too much. And you're destroying the point that you could buy 1, 2, 3, 4. That's a 4K. Or you could buy 2, 2, 2, 2. As soon as you do that, you're able to, if you want to use Fibonacci ratios, you're going to get in, by this time down here, if this is 4618 at the top, this would be 3618, and all the way down to the very rock bottom where you'd have like a stop that is 1.618 from 0 or 100. And so if you're if your optimal trade entry is there, then you build your fibs there. Yeah, of course, you could use it for that just because it's a ratio risk. You can make three. It's a quick and dirty way to see that you could quadruple your money. And you would treat it like an order. So where your mouse is at 100 or 0 at 100, right? And then 0 is maybe the master stop, and then you've got your pick whichever ones you want to be maybe your soft stop, or you're going to get 4 tickets in, 4 tickets out. As you scrunch that, right, that's your trade plan. Or you're going to hard write, and the only reason you have a pip grid is so that you know when you drop the grid, you go, okay, I'm risking X, and I can see that that's a possible fill zone. We could go down there. If we do go down there, do you think we'll retrace? The if-then statement is, now they talk about this in power trading like so your head explodes. The old if-then statement. My if-then statement is very crude. If it goes down, do you think it's going to bounce? Do you think it's going to retrace? If you think it's going to be a dead cat bounce, then what is that going to be like, right? Is that just going to be 3 pips? Or when it goes sideways, are you willing to put on the hedging systems that need to be employed? Because all the hedge bots show up when the market gets quiet and the volume goes low and all the gumpsters and all the goobers aren't trading it. And it's just like people are like, holy shit, this thing ain't going to go sideways forever. There's a, and then of course they're all surprised when it goes the other way or something, or, they're surprised that, wow, this thing really is stalled out and it could just go ripping. What doesn't stop ripping? Okay, well, that point typically is going to be a structure level where it gets trapped in for the scalpers, this 8 or 20 pip zone. It can totally go full tilt auction where it takes out the high of the day, takes out the low of the day, comes back and takes out the high of the day the next day. I'm sure you've seen it on the daily charts and you're like, what in the fucking fuck just happened? It probably looks amazing on the 1 hour. You're like, yeah, there's a double top here. It came back to here. People are trying to get even on these trades. If people really are trading it, then when it goes from balance to imbalance, there's a reason why it's going sideways. Is because everybody kind of naturally agrees on price. I think when it's rushing up and down, it's obviously it's catching up to itself. It's the aha moment of itself to be like, wow, we're really worth this. We're not. It goes from low self-esteem to high self-esteem in a flash or in a drift. I'm feeling better about myself this week. I haven't pissed off too many people. But talking to people that are senile can be a little frustrating. Or blind. When the one admits that they can't see. So that's frustrating. But I don't think I'm really a martingalist as far as I'm only using that term like I would use a stop hunt term. It's just a way to describe a market that's crushing, just blowing somebody's head off. Who's ever on the wrong side of that? Now, people will say, look at this thing going, man, in one direction, like somebody's getting killed, but somebody's also making money. So you think only the banks are making money on that move is hysterical. The banks would, if they're in that trade and they can handle 1,000 pips a swing, are they really going to, right? I mean, isn't that just for are they really like, well, we're going to go after those retail guys. We're going to give them a little rope, make them feel good, and then we're going to rip it all away from them. That's so hysterical. That's the funniest thing I think I've ever heard. Yeah, I was driving my car, and then the other guys in other cars were like, yeah, we're just going to take that roadway away from you. They're going to either tailgate me or get in front of me after they get done tailgating me.
Okay, and our goal is to make that sort of movement, whatever that movement there is. Okay, so really, if it moves back to here, then we're going to make what we were going to make initially. That's the kind of point of martingale strategy.
See, but that's not it for me, because what he's saying is I'm only going to take this profit. But I'm saying that if you can afford it, not this thick, and once you get to 8, forget it. Like once you get to 4, in fact, if you just want 1, 2, 3, 4 here, that's plenty of compression. That's enough, trust me. 2K, 3K, 4K, and of course, this is going to get out here. 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 And maybe this whole rack has a master stop here. Now, I back tested that. It makes a lot of money. In fact, if you go full tilt retard auction and make this one exit here as opposed to this one exiting here. Now, think about the difference here. You could have this exit. The possibilities are endless. You just have to find a retracement sizing that you can afford to trade. Now, they're either going to be single drops, which is ideal, that you're forced yourself to think about each ticket you place like you're building a Jenga thing. You're setting up dominoes that are going to be crushed. As soon as the market keeps going, they're either going to crush your dominoes and you're going to be stopped in because we went sideways so long that it's just painfully obvious that when we do break out, it's going to be brutal. Now, they will be trapping people. That's why I think you still have to trade the market. When it's down, you'd be like, I got to buy one here. What am I going to do? It's going up. I'm just going to buy one here at the market and then put a buy limit below 10 pips and 20 pips. And it's just this rinse and repeat thing. There's really no getting around the fact that it's just a laborious, fucking boring gig. To truly reduce your risk, you need to be hitting the buttons, go back. Are these orders in the right place? Are they coming after my limits instead of my stops? Are they coming after my limits? Am I going to overfill on this thing? When you can start putting your tickets, like, okay, if you bought at the market and it goes against you, then start dragging. If you're buying, start dragging a buy limit in front of the market and then let it go. Try to guess where it's going to bounce. If your Fibonacci actually works, you should be able to just put it on the 618, right? How about you put 10 of them around the 618 of different stops and different targets? So that's probably the best, right? Now, you can backtest this on one slice of data and see to yourself, okay, is that a viable scaling option and take profit scaling exit? Do I get in like this in a linear thing and just increase the size? Do I get in kind of a compressed mode where I get in a Fibonacci ratios where I get in here, here, or logarithmically here, here, here? And maybe the first ticket's here, right? So I'm barely in, I'm in. They're all the same size ticket. I have a soft stop here connected to all those, but on the exit, this is where it's critical. Do we get so greedy that we take it all the way? This is in a golf script. I call this the Super Bowl. When I did the first version, I called it the Super Bowl script. So it literally, as the market crashes into these limits, if it doesn't blow out these stops, and if it does, maybe you lose a couple tickets, but it still kind of recovers. It still has a greedy, totally fucking greedy exits that are up here. And maybe it's a hard stop exit or a soft stop up here. It's so complicated as far as how to soften the risk by picking at least 3 options. You can get carried away very easily. But imagine you bought here, here, and now you're going to martingale in because this is one case. And you're really going to say, you know what, fuck them. Master stop, master take profit. Now this is easy to back test because it relies on these tickets existing long enough to get filled, and we don't take out the master stop and we retrace and we do this as a one scenario, one and done. You basically trade the whole cup and handle. You are the cup and you exit on the handle, right? You start buying the lip of the cup all the way down. You're not gonna buy here like a stupid fuck. Maybe you will on one ticket as confirmation. But at some point, you've got to get in like this. You've got to get in just because it's up, you're going to sell. It comes down, you're going to buy. It goes up, you're going to sell. And you just get used to that kind of rhythm method. And maybe here you structure it and you're going to load up. But guess what? There could be a stop hunt around the corner where they're going to spike it down here and they can blow out this. And there'll be a spike down here and be like, holy fuck me. They came all the way back to here. Now, it's really tough to monitor 28 pairs even on the daily. I guess you could. If you could just look at the wicks there, you're gonna on the dailies, you're gonna get in like this. They stop on a little bit here, you're like, I gotta pick up some of that. And then as it engulfs here, it blows this out. So if you're gonna hit a button that's gonna be predefined pip grid wise, in other words, is this 10 pip handles? Are these 20 pip handles? Do you write a script that has this literally where it's going to go 16, 32, 64 with a hard stop on the whole thing? Okay, well, you're risking less. If it's got a hard stop here, by the time it fills this 128 banger, it's got the same dollar stop maybe, right? This is the same dollar stop to here. You could also have it like that, where every line is $5. It starts off with a 50 pip stop. By the time you get down here, your last ticket is just about ready to get blown out on a hard stop. That is the way to that's the way to scale in and have maybe a 3-banger script, just in simplicity terms. So here, and then here, you're going to make this soft or hard. Are you going to make the exit soft or hard? Or is it going to be a dead cat bounce where you're actually risking more on that one strategy at that one time than's really reasonable, but your chance of taking profits higher because you got this situation here where comes down and you have a stop here and you get out here like he's saying. You get out here and you scalp that. Okay, you recovered something. And depending on if you have a trailing money management coming in behind it is also going to make a difference. This one is underwater, say, and this one's going to exit like that. This one's underwater, it's going to exit like that. So then it's a completely different trade plan than the very greedy swing engulf, retracement, and then engulf. So it comes underneath the floor, then it stalls. That bottom does not become a top. It doesn't keep tanking in that scenario. And so at that point, it's kind of like, okay, so now do we sell? And it's very difficult to you want to trade the side with the biggest price pulse. And you can't overtrade it either, because depending on what time frame you're on, you'd say, oh, look, it's down, buy, it's up, sell. I mean, on the 5-minute chart, you're going to get annihilated by the spread and all the commissions. At some level, especially in Asia, you really can't play that game. You have to be a little more outskirts of town kind of person. You don't want to be right downtown. It's too expensive, too dangerous, or whatever. Maybe some of what you do is right on the outskirts in the country. So that's like the giant limits that are way out in the country, and you don't even know if they're going to come out there, but if they do, it's going to be amazing. Then you've got in the city, where the market's just moving around. It's noisy in the city, and it's very, you're talking about 12 pips, 8 pips, 5 pips, 12 pips, 8 pips. You're like, this is ridiculous. Like, what the fuck? And is this thing going to ever... And you can kind of see it drifting. A nice Asian trade looks really kind of obvious until they get to that borderline. And it's going to be, are we going to take out the high of the day? And we're just going to nick it and then come back. So this is always the classic place that I think the no-nonsense Forex guy's probably gotten burned. So he refuses to trade that because he considers that hot spot to be a breakout that he could be trapped on, and he doesn't want to get into that situation. And he's really going with the crowd. He really is. The other guy that was sending me a newsletter was like that. Follow the big boys. Well, I mean, I think you should just be a big boy and just put your own orders in. And just say, you know what? If it ever gets to this price, there'll be a battle there, and I can at least take something out of the market there in a high probability manner. And just throwing in orders that are 100 pips deep that last 15 minutes all day long, you probably won't get filled. I mean, you can back test that. You can see the rate of fill. I do have a robot called it's like a order tester or ticket tester. It's just keeps launching the tickets, religiously, at least on a certain time frame, like 1 hour. But if you let this thing every hour launch, the most money it'll make is that it's launching every hour, and it's letting them last for a week. And so what it's done is actually, in kind of a cloud thing, say it starts buying 50 to 100 pips deep, and they last for a week, and everything's launching on the 1 hour chart. So you're stacking up 24 times 5 tickets. And I think every time you launch one, that it literally goes a week, maybe counting out. I'm not sure. I've never launched a weekly order and sat in front of my screen waiting for it to delete, but I know they will delete on the weekends if you launch a day order. At the end of the day, you'll see it delete on a Saturday off the platform. It's kind of bizarre. But when you are getting out there real deep in the market, and if the market's zigzagging, this big chunk of orders that's in front of it has a mirrored version of that, 150 to 100 pips deep, say. In a 50 pip window, it's kind of riding along, which is kind of funny. I don't know if that is getting you a better, but it's just like a cloud trading system where the Tankanashis or whatever fucking are offset in front of you and shifted and dicked with, and because when you take the slow and you run that forward, it makes this forward cloud. It's funny. I mean, you're just fucking with time, really, is what you're just kind of, and for some people they like that. They like the colors too. Like let's not deny reality. The colors are amazing, and some of the I see girls could become a cloud trader. I think maybe. Look at that pretty cloud. The butterfly trade. So that's another thing. Candlestick trading, you can be a complete. Trade plans are based on each candlestick. You're like, yeah, I've seen this before. Yeah. Just gonna get in here, just so how it always is, Same stupid trades, same boring moves. I guess, the mystery's gone once you can see the pockets that it's filling and killing, and everybody's running their moving averages, hoping they get that good setup. It's so cute. What's really going on is they're stop hunting everybody's what they're doing, see. So yeah, I don't think my martingale's quite like this, guys. So here's my entry on the dollar yen. Once again, now what I was just talking about was a random launching of the script to see what it's like to do that trade where it's a greedy exit as opposed to this dead cat bounce, which is kind of what he was talking about there, I think. But say that we really got in heavy all the way to here, and we actually filled where we really bought the most. I don't think it's a secret that somebody got stop hunted down here. Bottom tick Tommy. So have you ever seen a market? Don't forget we bought at the market when this was down here. So it's a 3-stage approach. Yes, you could get on buy stops on the top of this small bar. It does qualify 1 bar, 1 filter. I realize you don't have to be in the market all the time, but if I had a gun to your head or I had battery cables on your genitals, if you had to trade, like for a living, for money, because you needed money for something, and you're like, okay, I think I'm going to buy down here next. Fuck, this is a no-brainer. I don't think we're going down there tonight. Maybe we will. No-brainer trades. That's what you want. So here, I'm underwater on, say, the top of this thing. This would be my ultimate exit for everything. If we ever make it back to here, but how did I know that this was going to go really harshly below this price? Why is that price such a big deal? And why did I really want to get in heavy here? And could I have gotten out on anything on this dead cat bounce? So in the 1 hour picture, absolutely fucking not. But I would say here, this one is underwater, but this one here, using this 1 hour wick, this little notch here that is above, it's just a break even now. So that definitely where the sellers would get out. The first sellers, here's another seller point, is going to be this rooftop on the 1 hour. I'm just looking back as narrow as I can. Another seller window here. Now, if I'm not in the market tonight, I'm going to buy here at this top, become a bottom, classic. And then here I'm going to buy tons. And I think I said last night, tons down here. And this is the tonnage area. because anything below here, and I think we're going to make our targets. If you loaded the wagon below here, I think you're going to make it to break even from here down. So you're really, what you're saying is that every time it comes down here, if it can ever make it down to here, and that is a 5 pip stop hunt. That is like a 4 pip stop hunt down here. Really? Yeah. It's hard to believe, I know. Look at triple bottom, trapped underneath the floor. The sellers did come in there, and look, they even trapped them here. People are like, oh, you know what? It's going to retrace. No, it's not. Right when Asia comes in here, New York closes, and then look at this pullback. Now, the spreads could have been shitty here, but if you got buy limits here to stop hunt some goober, some bull, you're either getting in on the stop hunt of the bulls to be a bull, or you're getting in on the breakout confirmation classic entry that is taught on the first level of Albert Brooks. Put a buy stop 1 tick above, 1 pip, half a pip above, 1 pip above, and let the market prove you right. Also, Alexander entry technique, let the market prove you right. But you can't always rely on that, because what happens when they chop you to death and whipsaw you to death? Your backup plan needs to be, I will buy in limits. If they're going to trap me, and everybody thinking that this is the story, right, is that everybody gets excited because we're coming up here. But when 1 hour, it goes a little bit higher the next hour. It closes here, and then it's able to come up here, and maybe it ramped up there. We can't tell unless we go to the next price thing. No, just turn around there. So look at this trap here on the 15-minute. Look at the low ATR, almost an inside bar there. I go to the half hour. It's a little easier. Okay, so here's the window. Come up in here. And here is the bigger, suckier vacuum, right? Because it's so tight here. It's like, you ever seen Poseidon Adventure when there's only so much air left? This is the first kind of like, wow, look at that. And then it just rips down like, what the fuck? But there is some guy, and it probably would have been me, because I like these entries where I'm just like, I'm going to buy here. I'm not picking some linear grid here at this point. I'm buying all of these stop hunts. And I really wish they would have gone down there possibly, but at the end of the hour, if I happen to be in front of my chart, I'm like, holy shit, I'm buying that at the market. Ultimately, you're waiting for it to fill this limit, which may never fill. This one, and you're pulling the trigger at the market. You can't run such a tight stop that you get stopped out of this fucker before it takes off. You got to have a couple risky, pip-wise, not size-wise, but it's bad enough you're widening your stop. Would never get into a bigger ticket. There's no need to. If I got buy limits here, and look at these people just smash that off of that rooftop. They're like, fuck you, breakout traders. Fuck you. Oh, they just trapped them. Now they want to go rape these fuckers. So I just put my buy limits in here now. Buy limits in here. And I'm going to trade this pocket as a pulls back. There's nothing else you can do if you're going to buy. Maybe you cashed out of everything in this window and you just took your losses in the martingale system, and where you're laying in thicker and bigger orders and denser orders down here. Hopefully you've already cashed out when we rejected this floor. So this was the easy money. Once it crushes below here, or even below here, is now a winner. This is the new kind of like pivot it's coming back into. But right here, oh my God. At the 50-yard line, holy shit. Look at that thing turn around. It's brutal. Here's the trap, comes to the floor, no sellers coming. In fact, it takes it all the way up here, clips the trees, then it kind of drifts, and here we go. Drifty, drifty, drifty. Plummet. Just ain't nobody buying it. Trapped on the top. Leaves behind big vacuum. Big wedge. Cleans that wedge out though. Whoosh. Here's where people really load up. This is the trick right here. This window is deeper than this. And the reason why it rockets through here is because once it shears that off, that is flying through that. Here it's cutting in, cutting in, cutting in, cutting in. This is stacking up. It just reaches total. This is not as beautiful. But once again, hope springs eternal for the bulls. And then, well, left this behind. Don't forget, we haven't gone down here yet. I'm sure somebody here has got to stop and get a hunt. Some guy that bought here thinking it's going up. Yeah, because reversals don't work. You should be able to see the other guy's trade. Let's hope, right? And of course, we want to buy here. We want to buy here. We want to buy here tonight. If we went flat up here, or we went into a short up here, we could have done anything. There's so many options. Without the filters, we have so many options. And the only thing that's keeping us is time frame. So in my world, there's only one criteria, time frame. If I go to the 1 hour chart, I mean, it's kind of hard to see the trade in the time frame you're expecting. So here I'd have to go like this and say, oh my God. On the 15, it's almost unintelligible. I mean, it's so like, look at this thing creeping up. And then 15 minutes down hard, man, boom, buy at the market. We actually get a trend going on the 15 though. Right, because a smaller time frame, we get one more zigzag, we can draw a trend line, a true trend line on here. First one. And first one here, you can draw. Finally break it. No, the trend line's not going to go forever. It's just telling you that, like, here's a classic. Triple top becomes a bottom on the 15, right? Breakout, pull back. Yeah, support and resistance on an angle defined by the market does exist, I think. You see this continually, and here's your next place. You could estimate possibly we're going to come down here, but you're buying down there anyways because you're looking at these holes. But it's just a natural kind of bounce, you know. To me, I think it's natural. Of course, we've even got, this is the first time we see it turn. So we do a horizontal line here, and then if we're going to project off of these highs here, this is the channel that never, I want a trend line there. This is the projections that were never gotten. So that's also divergence away from that trend line. That's another way to look at divergence, is not hitting expectations based on this price pulse and that excitement level. Because this was the propellant. Don't forget, people had built this glorious channel to heaven here. Here's another perfect touch. As I used to say when we were kids, when somebody was like a retard, we call them touched. Dude, you're like touched. I don't know. But see, this is the classic price pulse. You take that. It's probably a reversal in RSI, and you connect it to the lowest closing here. It gives you your target, although it overshoots. So yeah, I'm a heavy buyer. I'm in a light buyer here, and then when here, I'm light buyer to here. Here I get in heavy. And then as you take out this wedge, if we can ever get down to here, I'm so in. I'm totally in here. And I'm in for longer there. I'll let that order last all week, all month. So all month long, I would have bought down here anyways. Because I could see this back here on the other time frame. So if I go to the daily. So this is a different view. The daily gives you this kind of real clean look. Another thing to consider is that once they broke out this, they just kept marching up here, and this is the big vault that we couldn't really, it kind of marched through. So this would be your cup and handle. And of course, people would be buying here at the handle because they perceive this to be the cup. And of course, we can see the failures of every pattern trader when people talk about, well, you just put bracket this with the buy stop and a sell stop. Yeah, how'd it work out over here, buddy? Okay, so it doesn't always work, right? Like here, Oh, I got trapped long, I got trapped short. Okay, but if you had expansive orders, if you had more than one ticket in there, you could survive that. It makes the trade plan workable if you can have at least 3 tickets. That's what Mark Douglas said. You need one to scalp, one to intermediate, and one to hold. One pays for the whole cost of it if your stops are just right, and the frequency of trading matters. So if it's really down big like this, and you have it on the daily, you have all day pretty much to get in here. Look how they just nicked. Now you could find this area on the 4-hour, and you could claim all sorts of really glorious things about, oh, there's a double bottom here in the 1-hour, and the 15 there's a triple bottom. But in essence, it's just this is critical. That's 10 pip window. And of course here, I would have buy limits I walk away from. Here's where I'm underwater currently, and here's I'm underwater currently. And maybe here too. But how big, if I buy bigger, if I buy 1K, 2K, by here I'm in a 10K. And maybe a 12K, 11K, 12, 13. Every time I go 10 pips, I add a K. That's not as rugged as saying you're going to buy here, you're getting it 512, then 1048. That's insane, right? Also, this low here, wow, never quite made it back. So there was somebody, I'm sure, somebody with deep pockets bought this whole plunge. Only one dead cat bounce, and you didn't really start making money till you took out this low. It was supposed to be the next trend trader's entry. Oh yeah, people were like, dude, we're selling right here. We sell all rallies in a downtrend. Yeah, but then guess what? It's over. Bye-bye. I'm sure you can see it on the 4-hour chart, the roll reversal. Goes Bruce Jenner on you. I like this clunky look here on the daily. Kind of gives you a bigger picture like, oh yeah, they could go up here. Oh yeah, we could keep just smashing down. Just crushing it. This looks even better place to buy when I'm zoomed out like this. When I go to here, I'm like, yeah, I like that's, here it's a little hard to see the forest for the trees, but here I'm like, you know what? I could swing trade this in these areas. I just blanket this with orders, and I would sell more the higher it goes. So this is definitely a dense area here, because this notch on the top is going to be insane if you ever make it up there. I mean, you can see in previous kind of craziness, we knew this would be nuts. If we got below here and we went ripping out of that, we knew that was going to be brutal. That's that hot spot where they've been, and don't forget, it's part of this drama too. When it came down here and never made it past here, it doesn't mean we can't go down here at some point, but how are we going to get there in the next few hours? So if I go to the 4-hour chart, it's like, okay, my mind says to me, if I'm in the 4-hour chart, I'm going to do the same technique, and it's going to look like this. Whereas I don't know what's going to turn around here necessarily, but as it's coming there, I'm going to get in heavy based on the, so I have to zoom in a little bit here. I'm going to get in heavy based on the 4-hour chart. I'm kind of forced to trade it. Unfortunately, I can't take that daily trade plan necessarily and take it to the 4-hour. I can't do it. I mean, maybe you can, but I can't. I'm looking at stuff like this, like, oh yeah, this low here, this 8-hour bottom. So heavy in here, and then heavy in there, and heavy there, and heavy here. We haven't gotten there yet. Then heavy there, heavy. On the way down. So the sellers just came in, and now if I go to the 1-hour chart, I'm immediately going to think, I'm going to be buying 15 pips deep. It looks like a great trade plan on there, 1 hour. So 1 hour, I'm thinking, it just keeps changing. So I think it is difficult to trade more than one currency pair in multiple time frames. But if I got my buy limit here, I've already decided it's going to be here or aggressively on the very top. True top become a bottom. Then am I going to put in some really long-lasting orders here, time released, am I going to put in some long-lasting orders here, and how am I going to size this? If this is down at the top of the hour, will I buy at the market? Yeah. I bought at the last hour at the market, it pulled back, but I bought with kind of a tight stop. I don't want it to be so tight that it negates the fact that I really still want to, I still want to limit in here and actually accumulate more. So I may come in here with one scalp and one that is a swing that has a very deep stop here, because I know that I got all these orders here. I just can't wait to see them crush this in. And the faster they do that, if I put orders down here that last 1 hour and these last 2 hours, if this lasts 2 hours here, I'm really begging the market to come and get me. Right? I'm saying, come on, bitch. Come down here. And then I just go to sleep. Take a nap. See if it worked out. See if I'm right. Let the market prove me right on limits, not on stop entry. So I don't know if that explains it. But yeah, I mean, I see it like, if I feel I missed the move, I ain't chasing it, and it's time to think about, well, I also missed the other move. Okay. If you get to the chart and you're like, fuck, I missed the buy, I missed the sell. What is the next buy? What is the next sell? And maybe it's going to be hours away now because the market's already done its thing where it just ripped up, ripped down, and now it's just dead in the fucking water. And you're like, holy shit. Holy shit. Now in the 4-hour chart, it's like a whole different world, right? 1 hour, 4 hour. There's plenty to think about daily. Weekly, you're like, holy shit. Look at this weekly. And now you're going to hold this thing. Look where he punched into here. You can hardly even imagine that trade on the daily. You have to look at it like this. You'd have to be in this trade for fucking 5 days. And I suspect a lot of people will be getting out about here and taking their 100 pips if they actually got in all the way down rock bottom here and really loaded up. They got to here, they're like, that's good. I don't care if it keeps on. It kind of overshot it certainly overshot this thing. So it just blasting in. This did become resistance initially. So everybody's right? Because this bottom became a top and then it ripped lower. And then people got in here and they're like, holy shit, ruh-roh. Takes longer to make these pips than these pips, but it's more pips. Pretty tough. Trading's pretty tough, I'd say, if you're not willing to imagine that it could go lower and try to plan for that. And you can't think of any good reason because your indicators, if you're in Indicatorville, like there's nothing on your indicator dash that says anything's wrong. So you're like, that's kind of weird. Nothing seems wrong. But the car is making a weird sound, and you're like, yeah, but nothing on the dashboard. None of my indicators, but yeah, I don't know. It's getting all like weird. It's getting too quiet. Like, of course, I guess unless you're in the markets, with this guy's system, apparently what he's doing is getting in at the market, just kind of going into money management mode. And then he's like, okay, I'll run trailing stop. And then he talks about exiting a trade, which would be the same as entering. I think for the people that are going to take the other side of that trade, if you're getting out there, or are you just saying, you know what, let the thing run, move your stop to break even and see what the market gives you. Okay. I just think that with a little bit more work as far as order placement and scaling in, scaling out, all right, but then you have problems with the rule system, right? Because rules are so rigid, they don't make sense logically. The world's a dynamic place. If something comes up, you don't break out a rule book and say, it doesn't show up in the rule book. Guess we'll just shoot you. You just can't live like that. I mean, I know people that do. I'm currently involved with some talks like that. Now, rules are rules. Okay, but you fucked up. We have to adjust. You fucked up, so you need to adjust. You just can't. You have to be able to not have to rehearse what you're going to say so much. Although I think topically, I'm thinking about a topic I'd like to speak about, but to try to get it too rehearsed, I don't know. Just people say you don't complete a thought. Yeah, because I haven't like scripted it out what I'm going to say. And I'll just drop the thought if I think it's ridiculous. I guess this is my version of not saying anything. But, yeah, as you look around and you realize how vicious some of these markets move and just how like obvious some of these markets move, and I guess at some point maybe it doesn't matter to the no nonsense forex people because they're just happy to have a guidebook, And since I'm kind of hell bent on doing it my way and everybody else is out of their fucking mind. But that's just natural, I think. If you're alive, you can't help but be eccentric. You're seeing it from it's you looking out into the world. So if you made it this far without getting run over by a train or killing yourself or killing somebody else, then, you must be doing something right on some level, even though maybe you're completely obnoxious. And, this is also a problem because if you have anything to say, then you're probably obnoxious. That's why I got my YouTube channel so you can just babble on. That just seems to be a perfect fit. Just noodling. It's like noodling on the guitar. You don't have to play a song. You're just playing scales. And really, the market is playing its own scales, its own, I'd say not too musical, necessarily for people. Noise is not musical. I guess they want that singing. Isn't that guy, the famous trader that does the banjo song called the trade song? How are you going to get whipsawed? You're just going to count on getting whipsawed. The whipsaw song or something. I mean, this is this acceptance that, okay, we're just going to get beat to shit, But then there is the person that says, no, I'm tired of getting beat to shit. Really, I'm tired of getting beat to shit. Can I please take a pass on that? Once again, the dollar Canadian has not taken out the high of the month. But I think it's gonna. I think this time I'm rooting for it. But we did come up here, That was a nice move. So that was the big. And look at the 4 hour. Very bullish on my cloud system. I only trade it when it's right. Perfect setup here into the cloud. Looks like we're going to punch through, keep going up. Look at this thing tread water and just torture the fuck out of any breakout trader. Like, no, it's going up this time. I swear it. And then they're like, the guy gets in here really big. He's like, this time, look at it tank. We loaded up on that. I know. We are now blowing up the account. But the contrarian's like, oh, I love trading against him. I love trading fake news, fake moves. Look at this trap. Ouch. And now it's going to finally break out and be, God damn it. God damn it, it is going up after all. They were right. That signal service was right. They're so right. Look how much punishment we've taken, though. I don't think I like this dollar CAD. It just don't agree with me. Look at the torture these people had to endure. Bing, 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 bing. Oh, a little bit of relief. Here's where they get a little relief to the no-nonsense Forex guy. We'll give you a trend every now and then. Who's the guy that's getting the relief factor? We'll give you a trend every now and then. Keep your hopes alive for a trend system. But then most of the time, we're just going to... There ain't no trades here for you, buddy. You no-nonsense Forex. This is the 4 hour chart, guarantee you. There's probably no trades on the daily. If there are, okay, could you tell me, is your target 100 pips up or 100 pips down? I don't get this Forex thing. I think it's rigged. Look at this fucking dollar CAD. What the fuck? Is it just me? Or is that kind of choppy? Now just sit yourself down, son. Shut the fuck up. Look at this big, beautiful downtrend. Our robot caught this move. Somebody else recommended I look at some other guy's system, and I swear to God, this guy was doing trades like, wait, what you do is you get in here, see? How many times do you see that fucking trade? Well, it happens here. Got in here, see? We got in here. We got in here. We were right about that trade. Our biggest trade was we got in here, and we wrote it down. Okay. But look, for the love of Pete, what about just trading from, what about bing, bing, bing? Isn't that the ultimate? It's so hard for the trend traders, though. They really want it to go on longer. I can make it a trend trade for you. We'll go like this. See, it's in a downtrend here. Let me break this down for you. I don't think you even understand what no nonsense forex guys trying to explain, okay? You're totally misconstruing what he's saying. What he's saying is that this is the beginning, and he gets in here for this trend. This is the beginning, goes down, confirmation. He sells here, it goes down. It goes up, he buys, it goes up. It goes down, he sells, he makes money. Or here's when he really was clever. He sold here. I don't know. But I'm saying, isn't it better to think about, there's a good chance if we ever make it up here, it's going to rip back and just go, it's just going to fucking annihilate everybody that thinks it's going to break out. Could we just buy down here and sell up here? So can we buy down here again? Will we have a chance? Can we sell above here? I start selling above here. If I don't want to touch this thing now, I'll be like, yeah, high probability. Seller's probably up there. Go to the daily, you're like, oh boy, that's a lot of work. Go to the weekly, you're like, kind of like the weekly. Looks like it's going up. Nice trend on the weekly. I'd say it's going up. We just want to talk about these moves here where it pulled back. Even here it pulled back. It's going up though. It was perfect entry down here. Right on your trend line. It's amazing right there. Right there, I've been running moving averages. I've been trend trading this thing the whole time. I just buy a pullback, so buy here. Buy here. Bought a little bit there. Every time it's down. So that's the other thing that's kind of funny about no nonsense. What if he thinks it's in an uptrend, which is it's like it's going up? Well, it's big down here. Let's get in every time. Pull it back. Buy 3. I'm in 3. They're all 3 winners by the time we're even here. That goes up. Dump the whole thing. Let's fill the void. Breakout. Pull back for confirmation. This is the weekly now. The same story on the weekly. Right, the breakout. Pull back, stop hunt, then boom, then really trap them, come back. These are the low risk, high probability, big auction trades that make the most amount of money. Have nothing to do with the cloud. Selling in a 200 pip window to make your first target back to this point. Confirmation buyers come in. They're totally punished. It doesn't keep going up. Bye-bye. The buy deep guys buy here, cash out, sell the rooftops, buy the basement, sell the rooftops, buy the basement. Comes up here. Breakout, pull back. Now it just chunks away and then zoom. As soon as it gets above here, it's psycho case. Now it's drifting up. I'm selling up into this for a pullback. I don't know if we're ever going to get to pull back here for a buy. So, anyways, you just have to really pick your spots. Look at crude oil got obliterated finally. That was obvious. Too big of a hole left behind on the larger time frame. Look at this weekly. Once they hit this thing, man, a lot of people get the fuck out. That was it. They're like, I am out. A lot of people got out here, for God's sakes. Now it's a buyer's dream here. The scalpers have already got in. The aggressive guys are in here on this wick, which includes this hole. They're buying that. Also, I'd put in orders here. Just stream them down. It's easy to get to those tickets. Here you're holding. Hoping to cash out here. Here's your big fill. We never made it to here. So this big tall shelf between this low and here. That's what I'm looking at. Here, once again, this is the big, heavy entry. Everything from here to here, and then super heavy in after this, because this is the loneliest wick. It's a Three Dog Night entry there. The one's the loneliest number. This shelf in here is insane. So if you can get an indicator to draw that, that'd be beautiful. If it only looks back here and it puts in a literal box, right? It's not. You need an indicator that can draw like this, and it just goes like this. But I don't think there is one, so I just do it manually. And print it out if you want. You can stare at it and go, I like that trade. I'm going to buy it down here. The heavy hitters are along here, don't forget. Pound CAD, though. Better open your wallet. This thing can move. What's the weekly chart, though? Look at the daily. Nice downtrend currently. One downtrend you get. They gave this one to the no-nonsense Forex guy. We're going to let you have a little trend trade and let you think that thing's working, that algorithm you bought. That's what we're going to do, say. Let that thing cook a little bit. Make you feel good. But then we're going to go back to this bullshit. You'd be on the sidelines going, when can I get in a trade? When's my volume going to set up? Aww. Oh, I just missed this fucking entry here, and damn it. By the time I got in here in confirmation, I only took this little chunk out of the market. Couldn't see this hole. Nah, didn't see it coming. Think of all the people that are long right now in here. So where's the heavy hitters come in? I'd see it right there. And then here they get in like you can't fucking believe. How'd they do? Pound CAD. Just ripped. They killed it. These are places itching to get punished. Is there a dead cat bounce in there? A little bit. If you grid into this, this is the daily chart. You could sell rallies on the 4-hour chart. The crudest system in the world is it's going down on the daily, and you go to the smaller time frame, and every time it goes up, you pull the trigger. And adjust the stop to taste. So every time it's up, okay, it's up, sell, up, sell, up, sell, up, sell, sell, sell. That's overbought. It's up, sell, sell with very tight stops. The quieter the rally, the tighter the stops. Right, very tight stops here. Bam. Wide stops here because as this comes ripping up, see it really overshoots. You might have got stopped out adding to that. A little bit up, sell. Here's where they blow you up. Finally, there is just too much. And this is, if you look back on the chart, you'll see why it just fucking ripped. Didn't fill your trailing sell limits, though. Disappointment. So you're forced to, unfortunately, if you're going to sell, you have to sell at the market. They never come back to fill your limits, only this one. Fake breakout there on the 4-hour. I guess that could have been a fill. But just one ticket. What about buying at the market when it's down? Sell when it's up? Look at this thing just go smashing down. 8 hours, wow, with just only this much bounce. Incredible. Did you trade another currency? Look at this bottom become a top on the 4-hour. Wow. There's so much shit going on in here. How do people even do more than one currency? I think it's easier to trade the future than the past, to be honest with you. As I look back on this, I can see, to me, the obvious entry tonight is going to be, let's just fucking buy here. Let's just sell up here. See what happens. And that's the fun part about trading, is just you lay the trades out there and you just see what happens. Here we're underwater here. If we started buying here, This one we're about to be break even. The sellers are supposed to come in here on the daily. We never got filled on our deep discount orders here. It doesn't mean we can't at some point. I go to the 4-hour chart on this. Spread's 4 pips, don't forget. Pound New Zealand. Really, people? And I think that is also the reason why this is the most dramatic currency pair. Look at this pips galore. Wow, look at that. Look at that trap. Oof. Who got trapped in that breakout? Ouch. They're all underwater. So in the breakout strategy, let's imagine that you only traded this from the long side and there was a clean breakout and you rode it all the way to here. You're literally back at the starting gate. You didn't make any fucking money. You're underwater on that trade because you didn't get out. I think getting out matters. That's a big part of it. This window here is the kill zone. Also, the kill zone is the entry zone. So here's another great entry zone here. And here again. So the guppy's going to melt down. Look at it. Bye-bye. I think it's still going to tank. Are you going to go to the 1-hour chart to get in? Too late to buy. It's a buy on the 1 hour. That should be your first buy. We got our first trend line. I think we could drift up tonight. Otherwise, we're going to have to go down here. And then I'd be a buyer here. And here as I get in very heavy there. Very, very big tickets. Very, very densely packed. I would say the same size ticket, but densely packed in there. Here's a nice clean destruction of the floor and close. That's a nice obvious, nice place. Taking a risk here, I guess, selling into that because this bottom became a top kind of here at some point. Kind of took a gas for air. Now it's coming back into my buy limits. So if I'm a half hour from filling or 4 hours from filling, I feel like I'm in the market. I feel like there's a high probability of getting filled if I put orders in that last for a week that are 10 pips deep. At that point, I'm saying, I want in this fucking thing. And I'll wait a week for it to drop 10 pips. That really is critical. What is the expected rate of change and where do you think that we're going to get in at? Right, where's the entry and what is the estimated time of arrival to that price? It looks like dollar CAD is just going to keep grinding north. That's pretty amazing. Let me fix the scale on this thing. Got a 5 pip. I got a 5 pip grid on here, dotted line. So this was the take out the low of the. I can't see it on here. Pretty tough. You gotta zoom in. So here was the lonely wick. We rifle through that and we go 4 pips lower, take out the low from April 26th. Bye-bye. Look at that. They just grabbed that. First trend line we can draw here on the weekly. Closing prices. First time you can actually draw a trend line. The last time you could do that was here, and it really didn't do too well there. Another failed uptrend. Constant, this bottom here, on closing prices became a top. This is a weekly chart. But it really was this window here was a great place. This is why I really had to trade the wicks. Closing prices only tells this trend story. Like this was a good trend until it wasn't. This one over here too. Pulled back, get your first pull back. Looks like it's off to the races, but it's really just off to get trapped up here. To just die in the kill zone. Here's the next place to start hunting. I want to get in before it hits here, take something off the table, and then I'm looking for this thing to just keep piling north. Nice on the daily. So we fell down the rabbit hole. A couple times we fell down here. So there was this big washout. And then here we came after this area, which is a deeper zone. And then here, the ultimate super deep. The deeper, the bigger the reaction. Here, and then certainly the very bottom rung in a 4-pip window. So here, if you could have waited for this fill, you would have got in very heavy beyond that too also. And it just in one day, had you had predetermined exits of 10, 15, 20, 30, 40, 60, you're already out of the trade. It literally is like setting up dominoes. And now the question is, are we going to grind north into this stuff? Well, that remains to be seen. It looks like it is going to drift up into that, and dollar CAD's going to drift up, which means this would keep melting down. And the Australian dollar keeps melting down. So, pretty hard. Look at this double top here. This is an incredible double top. Kind of hard to see from a trend trader standpoint because the trend traders would be buying here and saying, oh no, I'm buying, we're in an uptrend, I got confirmation. I'd love to see how many times that guy gets burned on his confirmation like he buys here. That's got to be amazing. All right, so good luck. Good luck with the random volatility of the markets. So it's quite consistently random.